For more now on the Iran war and its impact on the energy markets, bring in Helima Croft, Global Head of Commodity Strategy at RBC Capital Markets, CNBC contributor, and as somebody you can see from the beautiful Capitol building, I assume that is not Austin, Texas, behind you, Helima.
Not.
It is not. You are in Washington. Austin would be a little higher, actually. You are in Washington, D.C., huge meetings, IMF, World Bank, big CNBC conference, IEA is there. What are people talking about? What's the global expectation of how this plays out?
I mean, Brian, there continues to be a divergence between experts like Fatih Birol, IEA executive director, who yesterday said, look, 13 million barrels a day are disrupted. 80 facilities in the Gulf have been damaged, one-third severely damaged. It could take 2 to 3 years to bring those facilities back. Warning about the dire economic impact if we cannot get a resolution to this war. And yet there's a large segment of the market, if you just look at the prices on your screen, that are pricing the end of this conflict based on the prospect of continuing talks. Now, you put up that map of the Strait of Hormuz. A map I'd like to see is airport maps in Washington. Which officials from Washington are actually getting on the plane to have talks on Thursday? We've had these press leaks of talks on Thursday. We've had President Trump saying we may have talks in the next couple of days. Really unclear at this point who is going to be leading those talks. And that's important because so many market participants are pricing endgame for this war.
They are. And the one, okay, I will see your Flight Radar 24 map and raise you a little bit of China. Because quietly, the Crown Prince of the UAE, Al Nahyan, is in Beijing, or was. What is China's role in all this, Helima? It seems like nothing's ultimately going to get resolved until Beijing, which is the primary buyer of Iranian oil, and not right now, but down the road, will be the most impacted by any continued blockade. They're going to have to be involved in this somehow.
Well, I mean, I think that's why we had the blockade announcement. I think the White House is hoping that basically if ships are not going with Iranian cargoes to China, China will become more active in trying to convince the Iranians to take the deal on the table. The challenge, though, is, Brian, is that China exercised prudent risk management before this war. They were basically buying aggressively for their strategic stockpiles. Also, there are reports that with that 400 million SPR release, a coordinated release from stockpiles, China was a big buyer. They put the barrels in their strategic reserves and then slapped on export restrictions. So the question is, how much economic pain is China feeling right now from this? And then there's the other side benefit. We've moved military assets from the Asia theater to the Middle East. Do they have a freer hand now strategically to think about Taiwan policy? So again, question is what's going to incentivize China to really pressure Iran to take the deal?
I know you had an interview, sort of a panel with Fatih Birol. He is the head of the International Energy Agency. My great colleagues here at CNBC also had a piece out about how they're worried. The IEA is worried or even sees this demand destruction from higher prices coming. And there's this huge divergence between, or convergence between, the numbers we show on the screen. That's the futures market, the paper market, and actually trying to buy a physical barrel of oil. What are they really worried about?
I mean, what everyone is worried about, you know, in Washington or at the IEA in Paris, is that divergence between the price you have on the screen and how much you have to pay to buy that barrel now if you're a refinery, that it's going to ultimately converge and we're going to have much higher prices flash on the CNBC screen. Now, people have been saying that for a while. The question is, when are we going to get convergence? And the more people in the market think this war is about to end, we have the continuing divide. That's why I think it's so important, these peace talks. I think we have a very limited window. I mean, this ceasefire expires on April 21st. If we're not further along in getting a deal at that point, the market participants start to say, wait a second, we're going into summer driving season, and no barrels are moving through the Strait of Hormuz. Like, this might be a more serious outage as we think about who's going to be on the road.
Well, I also feel like